to the Breakfast Club. My name is Darren Hancock, and it's Monday, the 4th of August, 2025. Welcome, welcome. Hope you all had a great weekend. Hope your families are all safe and everybody's good out there. I hope you're all doing well. Okay, let's have a quick look at what's going on in the markets this morning. It's a holiday here in Canada, so I think the Canadian markets are closed. As for the on here. So as for the rest of the world, I guess they're still out there. We still have a market. Doesn't look like there's any news events today. Maybe something tomorrow. So it could be just a back and forth a week until we get some news to get a release here. We'll see how this, we're going to try Ollie's little technique this morning, as much as I understand it. So when he gets on here, we're going to kind of, I'm going to kind of talk us through this, what I can see anyway, and then he's going to correct me if I'm wrong. So I'm going to try and help you guys out today. We'll give you, with Ollie's permission, we're going to give you guys his setup, if I understand it correctly. So give that a go. Good morning there, Adi. I'm doing well, thank you, sir. How are you? How's Daniel and your lovely wife? So I'm looking at, just took out these highs. One little pop up above that high. The key level I'm looking for is right here at 092. So if we run back through that level, I'm on the wrong side of that. Or run into that 092 level. I took a short here after taking these highs, get a reverse, and then a market structure shift, using this market structure to go lower. I did not want to see us get back through the mean threshold of that, which happens to be right at the 830. Well, you got to allow it enough wiggle room to go to here. If it gets through that, pops through and continues going higher, then this is just a small swing back inside this larger range. That's 50% there. If I take the larger range, it's just shy of 50. See, we're already above this level here. We've swung here. So now I'm stuck between this going higher and this rolling over coming lower. And it's consolidating in here. So we'll leave the trade on there. If it violates that rule, then we'll be out. So my failsafe is right by, or this, way before the stop zone. Stop loss, not way before, but you know, if we break that point there, I'm on the wrong side of it. So I'll wait for market structure shift, come back, get in sync, and go higher. We'll just wait for 9:30. It's close. All right. This is what I put out for you here on the weekend. So this was the return I was expecting this week to our first equilibrium. And we've hit that. We're bouncing around on that right now. So next key level is 0.91. And that coincides, I think, with the hourly chart. Oh, these are all 4 hours. Okay. The 4 hour go, no go line for lower is here. The London high was set here. We've taken out that London high already. So I'm expecting this to go higher now. to the London's high. We're starting to move higher. This key level here is the main threshold of the 4-hour breaker. And if we start to close through that, then we're looking to go higher. That should already be gone down there. Oh, yeah. Stop would already be taken here. So I'm looking for this key level to give way now. And some support at that and start moving higher. Second equilibrium's here. The regular trading hour gap for Friday. Wondering if this is going to fill in. And then we have a second equilibrium is right here, the larger range, with upside objectives being here. If we can get above that level at 120, 130 on a close, come back, find some support. I would expect to see a run up into this level right here first. And if we take that one out, then I'm looking for this larger range up here. So the kind of things I'm keeping my eye on this week. Nope, hasn't taken me out yet. Still, we're banging around between these two right now. Let's tap to these 830. That looks like it's going higher. So I'll wait for it to break out of here now and use this for support to go higher. Good morning, Ollie. All of us are pretty good. Summertime. I'm glad everybody's good, doing well there. Indeed, that's excellent. Morning, apps. Rom, good morning. My upside target is 23,169. Yeah, that's a 4-hour busy. Yeah, I'd like to see it take that low. This is where those little wicks start to come back and take up levels of precision I'm looking for. If that rolls over now, then those wicks are what with me. So as soon as we get a body above here, we got a body about once, and then a body below it. So you wait for market structure shift. I was looking for this guy right here, and it did not go lower. Traded all the way back through it into this, gave it some wiggle room, and now it's traded through that level. So I've traded all the way back inside this here. I want to see it tap here and use this to go higher. So we get a body above here. So I'll use this one here to go higher. Remember, between this one and this one, we broke through this one, came back, found support at that, broke through this. So now you've got double confirmation of going higher right now. Let's see if we get this closed above the high here, or if we just roll back over and come back into this consolidation again. Good morning, Joe Mac. Good morning, Russell. Right there. Let's see that keep coming higher. No body above here yet. So to me, you got to get out of this little consolidation here. We've run these highs out. We've popped up above that one again. You want to see these get taken down here and use this for support to come down to here, and then eventually run the lows out if we can get support down here. And that Ollie, if I understand it correctly, will be the first run. I'll take that. Unless what we do is, if we take that, if I understand this correctly, we've got I'll take this whole area here. Like from 7:30 and we're just going to hold off on this little area of interest right now. Sorry, buddy, I'm not going to call it what you call it, because by ICT definition, that is not what we would call it. So I'm not going to call it that, just because I don't want to add to confusion of people. But I understand that's what you like to call it. So keep your own word on it. Right now, we're just going to draw this out until 9:29. And I'll just move this up as we go higher. Now I was back testing this and I was looking for the key thing I was trying to find here with your presentation that you gave us the other day, which was great, by the way. Appreciated that. Was which time do you start it on? And I've set an idea of starting it at, I think Michael was typically calls for lunch hour. But I'm just going to take the most recent run, low to high, after London. So I'm just taking this little area here that you've got. You might be taking it from here. So I'm just going to look at that, wherever that ends up at 9:27 or 9:29. Then we're going to wait for a little pop up below it, and then I expect to see that run down. We're looking for this to clear out the downside. Area of interest is cool by me. Cool. Is that typically what you're looking for right now? Like this big run into 9:30? Now, I know you have a certain point and you look for these little hairs that form at 9:25, 26, 27, 28 area. Good morning, Hans. Morning, Ali. And then you look to see how it reacts off there. Now, what I'm going to look for is a similar thing there with a setup like this here that confirms lower or higher. Now, typically you'd wait for a market structure shift here. Get this discount array here out of the way. This one right here inside this range. Good morning, Craig. So let's quickly go through some of this other stuff because I've got I had us returning into this breaker this weekend. And that's what we've got so far. Now, it's consequent encroachment, which is what this key level is here. That's the same as the NASDAQ. See how ES has hit its consequent encroachment, or this breaker that takes out that little low right there, that little swing point. That right there is the mean threshold. So it's hit it. NASDAQ hasn't quite hit it just yet. It's probably going to hit shortly. But that's the area of interest. Sorry, the mean threshold that I'm looking for on the key level that I've marked there. And then you want to see if there's a small little imbalance. See if we can get back through here and here and start using this as support to come lower. Would attack these lows again. If not, this holds like it is right now. It's holding price. So you're really between this and that mean threshold. So from here and here. So what you want to see is a break above that high. Use the breaker as support to start pushing higher. That's what I'd be looking for there. Immediate rebalance. So looking at this whole area here as the support level to continue pushing higher. If it eats through that level at 43,621, looking for a deeper run down. I guess as we're looking for a deeper run through down to 43,302. And then we'll see if we get below that. If we can get below that, then we're looking for these a deeper run back into here. Bouncing off this old low. If you find support there, push higher, look for 50% of that range, or at least a return back into here. It'll also put you at just under 62% above 50. See this 1 hour breaker? So we pop through it, give it a couple of taps, kept coming lower. Okay, see you in a bit there, Hypes. Green trading for Disney, is it? So I'm looking for a retest of this down here for oil, 65.09. I haven't broke that out even further, any further than 15 minutes. That hit right in our box there. So let's see if we can get a retracement back into 303 for anywhere from 303 all the way to 306 in natural gas to keep coming lower. British pound. That's supporting. That's supporting. So I want to see 133.13 high get taken, and then we'll see if we can use this for support to keep pushing even higher still on the British pound, which tells me if the American dollar continues to degrade, we're looking for, we want to use right at a level here. We could see that kick back in here. If that little push takes out the high, that means I'm looking for this to push down to this discount, or this discount, this breaker right here. its mean threshold. So 98.21. Be looking around there somewhere for. So if we get down into there and get through that level, I'd like to see it run deeper into this range here. Get back to 98.21. Well, we hit our 5 objectives on the way down. Each one of those was hit, went lower. Hit it, consequent encroachment. We had an immediate rebalance right here. Body trades above it. We come all the way back inside it. Go higher. So now we're on a turn. So the next objective, 6 and 7, wasn't hit. We did have a nice little return, change in direction. Now we've got this body breaking above the high here. Use this as support. And it's coming back, found support at it. Also at an inversion level. It needs to stay below that level I had on the weekend, and we have been now popped above it, come back, found support at it. Now we're looking for it to come higher. So that's the level I was giving you guys on in the channel on the weekend. And now we see we're above it. So we're looking for a return back into this range. Put your fib tool from low to high. And we're at 62%. So keep your eyes on that level. So if you're paying yourself an internal range liquidity hunt, so you've got your entry, small profit, zero stress, pay yourself here. Stop loss moves to 50. If you're using that take profit model 1, you're at zero stress right now. Pay the trader, put money in your pocket. Gold. Key levels in gold. Good morning, LB. Yeah, I'm following. Oh, you just deleted it. I was just starting to read your message there, Ali, until you deleted it. Yeah, I'm following something. Have you looked at gold yet on the hourly hour? Here's the gold I'm looking at right now. So looking for that as your upside objective immediately. Let's see how we go from there. Now, if you can get above that, I expect to see an acceleration through here. So if you see it tap, see if it rolls over here. But if you drive through it, come back down, see a quick tap, and then you want to see that accelerate through here. That higher, next to that level. That would be box to box in a huge way. In that whole huge range there, there's your box. Think about trading inside that small range. So if you did trade this, for example, if you trade, what the heck, there, what's going on there? Why am I not getting that? Oh, there we go. Weird. There's a little bit of a delay. So if you're looking for this, this is your internal range liquidity from here to here. I'll pull this out of the way so you don't have all those numbers confusing it here. See how we have a change of direction here? We pop above it, we come back, get support at it. There's 50%, there's 62, there's 70% ultimate trade into a reversal, takes out the low, and then we look for a turn above this high. Remember that one to the left of it, and there's the left, trades it, comes back into it, taps it, now starts to run that high out, takes out the high, use the highest leverage to go higher, reach for the next objective up here, you hit it perfectly right there, bounce, 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 finally closes above it, comes back inside it right here, comes back inside it again, and then finally takes this high out. So that's the little tricky area you got to watch for right here. When this does not form to the left of taking out a small low, the potential is for it to run back and take it out again. So use this first one. If you're using this as an inversion, use it to get back inside the range and then wait for your premium levels to get taken and then get back in sync with the market. If that makes sense to you guys. I told you the banks were on the turn, didn't I? Look at that. I got out of that just in time. Okay, so there's the same kind of principle that you can use as we have a, even though they're equal highs, we have a change in direction, change in the state of delivery. Then we have a market structure shift below the low. We use the market structure shift to continue going lower. So we open down here to come back up. So it's $4 drop. But if you're savvy enough, you'll see that it's a $5 drop that you've been able to catch early enough to 81. We're down to 76. So same kind of thing here. Change of direction. We've got a high taken, change in direction. We have a body that trades below this, trades back up into it, then quickly changes direction in you again. We're looking for a market structure shift in TD Bank. We have a body that closed below this level now, so we've got a market structure shift below this blue breaker. Now expect to see this potentially running back up into this little low here, roll over and keep coming lower. Change of direction right here. It ran the high out one more time with a wick. Wait for a structure break. It did right here, open below, comes back into this, roll over, come lower. The wrenching, same kind of thing we saw right here. Trades below it, comes back up inside it, takes this lows now, and now we've got opening below this level. So we have a market structure shift in banks. Market structure shift in banks. Comes back, taps it. Bank of Montreal, much more precise in terms of body closed below the low, came back inside it, hit it, went lower. Small change in direction. You'd have to look for this to get taken on the downside. It didn't go below the downside until it opened today. Opened here, came back inside. I expect to see if this holds now, rolls over, comes back down. If it goes back through that level, then this was just a psych me out and go higher, and the next price leg goes higher. So I'm not worried about that going higher until we start getting above 77.48, like these key levels here. That's what I'm looking for. So otherwise we're going lower on banks for a bit, and we're going into Jackson Hole. We're going into a seasonal tendency for the summer to make it a little low, or to make a low in July or August, and then run up into September, and then roll over again until October, and start running higher again. That's typically what we look for. Little piggies, look at that turn right back to that next little area we had marked off with precision, and now it's changed up on us again. So for me, I'd have to wait for us to get out of this consolidation, get back up on top of this to start reaching for these two objectives here, and then once we get above these equal highs, then we're looking for that continuation from here. Let's give it an idea of low to high. I don't know why it's doing this. Everything's just going, look at that, it's going white. What the heck? Everything's gone glitchy on me here. Wow, is that ever taking some time, eh? Are you guys catching this? Are we back? Is it back in the saddle here? I'm trying to look at the channel and I'm looking at your YouTube, what you guys are seeing on YouTube here. And it looks like we got a little bit of a delay there. Are you guys with me? Should take us right to that level there, if that's the next price leg. Okay, you still got it wrong. Thanks. So now I'm just looking for support for this price leg here, above here, and keep pushing on there. Disney. What do you got for Disney? Pre-market's already up here. So Craig, if you're looking at Disney, I would give that to there. Watch this as a this could be just a retrace to here and do the next price leg lower, which would put us right in take this. That low, that low. CE to CE. So I'll be looking for in here, Craig, look to see if there's any potential for a reversal. I don't see anything on that right now, but this is a 4-hour chart. So go down to the 1-hour chart. You can dig around inside here, but that would be my 4-hour go no go zone. If we get above that, then I'd say you're reaching for higher prices. Otherwise, I'm still looking for that to go lower once it gets into that box. Ford's hit our box again. I'm just still waiting for that to roll over and come below this market structure shift to use this as support to come lower. Oh, we looked at little piggies already. US CAD. 830 right there. Let's get back to this level here. This is 829. Here's 930. Why is that so glitchy? Are you guys seeing all that glitchiness in YouTube right now? Does that just look? It looks. It just keeps spinning a spinning wheel of death there. So I'm wondering if it's my computer. If it is, then I've got programs that are running that I should turn off. That was 29, and this was 30 here. So this was the open. 29 ran above. I've got nothing there. So Ollie, unless you're you've got something that there's a retap of the box. Let's see if that goes higher now. That's the only thing I could. It's not even. Well, that's 929. That's 930 right there. Yeah, what I was looking for here, Ollie, is do we get a body above here, come back and tap it? So we got a fair value gap here, run back through. Yeah, I guess that would be a fair enough hit. You got this fair value gap, forms, comes back, fills it, and leaves. I didn't get in on it. It's tough trying to use somebody else's setup. I want to make sure I give it all the justice it deserves. And this is Ollie's setup, by the way. I'm not taking any credit for this. This is his. And I want to give it the respect that it deserves. So, Ollie, you have to help me out here if I don't, if I've got this, if I've interpreted this wrong. So we've gone through that key level we're looking for here. Now I'm looking for the second level equilibrium and this regular trading hour gap we're in on Friday. Starting to see if that fills now. This should be a straight one of your stage one runs, right? I'm anchored off of 807. Yeah. So you're looking for 25. You're anchored. Why did you pick 807 and not 725? That's the question. Because this anchoring point that you have changes. And I think people need consistency in the anchor point. It didn't take out any lows. So are you only looking from 8, or are you looking from 7, or are you just eyeballing something that you see in here is the last run specifically? And are you only anchored to the top of 832? So yeah, I think that's what people are looking for consistent places to anchor from. And I just looked at whatever the lowest low was taken before 9 o'clock, and then look at that as the run to whatever happens before 9:29. So if I've got that wrong, you can just kind of jot that down on the side there, what it is and why you're anchoring that specific point. It's been buffering lots, hey? Sorry about that. This would be a nice little, this would be your stage one run there. Now, did that one, where did that one go? Now you typically look for, so I'm going to do this, and then I'm going to put it from your anchor point as well, Ollie. So we're looking for this 25%. Look at that, right off that 20. That's from my anchor point. Now I'm going to put it from your anchor point at 807. And it's just below it. You see how it doesn't reach it? But if you take the lowest low before 9 o'clock and then let it run up until 9:30 or 9:29, then pull your fib tool, look, it lands up. If I go from there to there, there's your 25% that you were telling us about. Ran through it, came back, found support at it perfectly, and starts to run higher. And that's what I did consistently. I went back when I back tested it. I looked for the lowest low or the highest high after London. And then I just ran out. That was in at least the last couple of hours. So from 7 o'clock on, I just hunted for that one specific spot. And then if we take Hadid's mark here, they should put us in the top 75%. Because this is another observation you made, was that it's pretty close to the consequent encroachment or in the top 75% or bottom 75% of that range box here. We'll have to give it a new name, this area of interest, for the sake of giggles here. So what I'm going to do here is I'm just going to go from low to that point right. I did that wrong. You see what I did there? I went to the open, I didn't go to the high. Stand by. I go like that. 25% puts us right shy of that 8:30 open. But you see how we use that premium level here? This is getting much more complex than I'd hoped for, but I'm trying to add some of the stuff that we're doing here in the morning to bring a level of entry for this setup you have. There's the change in direction. You back up inside it, you hit it, hit it, hit it, and keep going higher. If I take this right to the high right there, put this right back on 29 right there, 29 puts this right there. That's the high. So all of that. Don't throw the baby out with the bathwater, you guys. We're just trying to sort it out. Now 25 puts us right on there. And 25 puts us way away from the 8:30. I'm looking for, now if I use your 8:30 level or 8:07 level, no. So that's where the bottom of the next 4-hour SIBI is. We've hit that 4-hour SIBI perfectly on the 169 level, 172 level. And now I want to see if we get a kickoff of here, or do we just come back, find some support at 128. So I'm looking around 128 here. So we need so Ollie, we need some consistency for this rule here on where to set this back here, this leg that you've got, because there's obviously you've got some magic in your discovery there. I think most people want consistency here for where to anchor back for either a low or a time before they set that 25% on either side and use it for support or not. Because if it's a variable that varies and you say, well, this one looks good to me, then if the algorithm is as precise as it is, I think people need a consistent anchor point, be it time or look for a specific swing point. So if you give me on that, that'd be great. Because if I'm totally wrong off here, then I'll stop this. You and I can have a little private discussion about what it is specifically I should be looking for, and we can I can go back this again because I want to give it the respect it deserves, because it's a pretty awesome little setup you got there. So looking for this whole regular trading hour gap here now to fill on Friday. That level is disappearing now. So now they're looking at the equilibriums, and they're almost overlapping of the regular trading hour gap and the 4-hour SIBI. The next level I'm looking for is that equilibrium, second equilibrium. Look at this next price leg. It's going to be huge. That puts us right up at 246. 246. Puts us into 75% of this regular trading hour gap. We're just bouncing off the equilibrium there now or the mean threshold of, sorry, the consequent encroachment. I know it's the same damn thing. It's the same spot. I'm looking for the midpoint of this SIBI or consequent encroachment. We bounced off that. Now I want to see if that continues to push higher here now and starts reaching up into 246 for the continuation of that price leg that we just had here. I want to see if this one continue pushing. Same distance up in here. I think the anchoring is tricky. I used the 870, 831 because that is a clear run to ES on NQ. The run should then contain the market until open. After that run is made, ES contains the market. I have to work on that some more. I do not want to give a clear explanation of your setup. So I'm going to work on that some more, so I apologize for that. Don't judge his setup based on what I've just showed you. Oh, he had an awesome presentation. You can check it out on our channel. And you can see it for yourself. Leaves to run and should be contained within the 930 arrives. And ES leaves it with a fair value gap. 930 taps to 1.25 and leaves. There's the top. We're reaching the top of our 4-hour SIBI now. Right there. There's your 220. We still see that keep pushing higher now, reaching for that second objective or third objective, which is the second equilibrium. And we're just looking for any opportunity to catch a change in direction, market structure shift. If you look at this 5-minute rule here, I'll show you on here. The 5-minute rule, same thing. That's why this is a fractal setup. It's fractal every single time. If your stop loss was sitting here, you'd be still in it. Change it. Damn this thing. It's suddenly going to go blank. There we go. We get a change in direction again. I'll wait for market structure shift now. So we're not in this consolidation. You take one little low on that. We got kids over here right now. And they're clearly awake. So wait for a body to break this high. Body breaks the high there. We come back, find support inside this candle, and then keep pushing higher. We also have that little imbalance right there. Just so you can see that it happens on all time frames. No, it's tricky in real time, but I'm working on it in demo dollars. I also don't get it right, and I'm still figuring it out. That's okay, Ollie. I'll help you out as much as I can. There's a lot of smart brain people in here. We'll see if we can figure something out that gives you consistency and you can see it live. We're looking for those key entry points live because I like what you're doing and I want to get it right because I believe you have something there. So right here, we're just still in that 4-hour SIBI. And there's a 1-hour SIBI here as well. And we're right pretty much near the consequent encroachment of that. 227. 70% puts us in here. For me, you have to break this structure here. Otherwise, we're just hunting internal range in here. And this is the reverse. We're changing direction right there. So we closed below it, tapped it. Now we're coming back down inside this range. So I'm looking for this 50% area to get hit. If it's really bullish, you'll see just the tap of this and go higher, and the 50% doesn't get hit. Like it's just going to use this box here to go higher. I didn't take a trade. I'm hoping this is a two-stage. Let's see how it acts right here. Just tapping the top of the box now. Now, if that's got some real bullishness to it, it's going to take off from there and start heading higher. Yeah, we got lots of them up there. $220. Yeah, a small little pocket there at 225. $237 to 248. This is what we want to see. It's got some aggression now. I want to see that just leaving through here. Now it's accelerated. Remember, we're talking about we wanted to see it accelerate through that level. And see how it just popped and ran really fast through that level. We wanted to see. That's good. Now I want to see this. This is as we were talking. If you don't reach, if it just taps that and accelerates through here, then good. I want to see it close above here in the next 30 seconds or so. Use this as support now and continue pushing higher. Yeah, it's the same one I'm looking at here, Hoodie. This one. So here's the next 2 seconds. Good. Now see it's come back. We did not get a body above here, so this is the valid one for me. I want to see that provide support or this open midpoint. Expect to see a wick get back into here. Unless this stays open now and we get a body above here, come back and tap this and leave that open, or this piece open. So just watch. And we're in macro time. Next 15 seconds or so. Did these highs. And I know I'm super picky, but whatever. There's the tap. There's 50%. Let's see if we can get a reach into here. There's a tap there. I'm going to put a long right there. I'm just going to put a stop loss below this level. I did not want to see that fill in. No, I don't want to see that. So now my stop's going to go here. I don't want to see this get retapped. It's got to leave here, or it's too much consolidation for me. You've done your little bit of damage all the way down and filled that little guy in there, which is not, that's the last level, D level response. Is, you know, your A plus would have been an institutional order flow entry drill, keep going. Your B, C, and then D is the low. So if it takes that high now, I'll move to break even. I'll leave one on there, so there's break even plus the cost of the trade. Zero stress, let it run. And we'll see if we can reach for the second equilibrium at 313. I'll take profit at 313, right? Under it at 312 there. So now I expect to see no more than the high or the open of that, and I'm just below the mean threshold. So those are the three levels that I want to see get attacked with this candle. I want to see that just keep accelerating away from that. We just hit new week opening gap on NQ. Yeah, and we're ripping through it. The next new day opening gap is 261 to 265. And then my at that 309 level to 329, 330. That's the next new day opening gap above us there. And now you decide what kind of take profit model you want to use on this. So for demonstration purposes, I'm going to use take profit model 3. It's 10 o'clock. That is now filled in that 1 hour fair value gap right there. So if we trade below that level on a close, I'll close it out. Because that's what take profit model 3 is. When the BISI gets taken on the downside on the close, you can either get gutsy and hope for it trades back into it and get a little bit more profit out, and then move to the sidelines. Or we just keep marking them on the way up until one gets broken. 23,310, agreed, Hans. Yeah, that's the upside next daily fair value gap. Yeah, I got the 4 hour. This is all 4 hour. We come back and find support right here at 2330. Then I expect to see that push. I'm looking for this regular trading hour gap to fill on Friday. And that second consequent, or second equilibrium. I'm looking, if you're looking at this 1 hour chart, Hadi, look up here. You see that premium box up here? Gone from discount here to premium here, which is also second equilibrium. That's why I'm expecting it to get to here. Just posted something in Coder's Core, hopefully explaining all these runs. Yes, excellent. Thanks, Abs. Look at July 22nd. July 22nd. I look at on the daily chart, you mean? That would be 284 if you're looking at that. We're already through 1, 2, 3, or through 3 of those arrays already in one candle a day. So you're looking for 288, 281, somewhere around there. Candle you're looking for, looking out on the 22nd. Then you've got that little imbalance, that little volume imbalance above you there at 311 to overlaps our second equilibrium and the fill of this regular trading hour gap. So they're all confluences that can overlap. That's it. I don't want to see that close below there now. What happened to my trade? What happened to my trade? Did I click it off? Did I have an old man moment there? Oh, there it is. It's like, where the hell did my trade go? You see that's dragging behind us, eh? Okay. So now we've got this level here. We traded up to it. Now I want to see, it's got to stay there now. And if I look at 50% of that little range there, you can have a little wick below there. That's it. 62% puts me in here. 70% puts me right there. So as long as I'm below that, those retracement areas, I'll keep that going. look at July 22nd on the 4-hour. Oops. This right here. See what you're looking at. Yeah, still puts things, you're still overlapping all those key levels that we're looking at, even with this box, the 4-hour. It overlaps the premium, it overlaps the second equilibrium, overlaps fill of the consequent encroachment, or sorry, the regular trading hours for Friday. There's so many little areas it can turn around in here. So 5 seconds, see where that is. I'll close that out if it closes below there. It did. Come back, give it a kiss. I'm out right there. That's the first. Close below it, come back, take as much profit as you can, see if it comes lower. If it takes out, so now we've ran below that low, you've tapped it, we're going lower. Now I want to see if this ends up becoming a market structure shift below here and here. So that's a take profit model 3 for reverse there. Now I would wait for price to get back through this level to find some support to go higher. Otherwise, that's a perfect way to exit it with a take profit model 3 right now. Small victory, but it shows me that this is a change in direction. So we have change in the state of delivery. Just want to see if this now turns into a market structure shift. There's a small little zip below here. So now we're trading through this level as well. Makes you glad you got out there, right? Mean threshold, all in one candle. You're just getting this high, open, and mean threshold traded through. So your ass is next. So awesome places for it to turn around and right and set that little area back in here. Hadi was pointing out on the 22nd, or 23rd. Oh no, this is the hourly. This is more specific on an hourly. Right there. Let me just extend that all the way up to the end, and we'll see if that overlaps. Let's push that all the way out here. If I extend that to the right, oh, we're way above it already. See, just that wick alone would have done the damage. So now we've traded all the way back inside this level, inside this larger range, inside this little breaker right here. Inside that gap. A little messy right there. So once it's get about back above here, take this candle out and then get back in sync with it and let it go higher again. Low taken, fair value again. Discount, premium. put one right in there. Right on there. Now, I do not want to see it come back down into here. I want to see that pop above here. Take this mean threshold and look at these two right here. It's not ripping lower yet, but I do agree with you, Hoodie. I'd like to see that 11 o'clock do a nice little punch back into this range here. Take these two out, come deeper into that range, and then start running it back higher again. I'd like to see 11 o'clock here, make this the next price leg. Is that what you're looking at? See this big price leg here? You don't want to see it dip into here somewhere and say, all right, now let's see it punch higher from there. See how we're freezing on that level? I do not want to see it get back below here. So I'll get a very small, tight stop loss. I'm demanding this small range here. I've already traded back up inside that, so I should have been taking profits there if you're looking at this small range liquidity hunt. So this level here has to hold price. Right now we're between that one and that one. If this rolls over here, look for it to take that out on a close, use it for support to run the lows and come back deeper into the range. And you want to see this really accelerating through this level now. I want to see it bust through here with some sense of urgency. And you have to debate with yourself whether or not these small little ranges are even worth you playing in, or you want to see a bigger confirmation above a breaker. So if we get a close here now in the next 24 seconds or so, I want to see this real big candle push through here now. I take that high, I'll move to break even. That's the cost of the trade. Why is that not moving the area? So that's the cost of the trade plus, so it's zero stress now. And I want to see that now push through faster, faster, faster. Let's go. Get a big body through here and look at this candle. Or look at this one here, I guess, for some support. Push higher. Now that's to see that's demanding certain levels that you want to see price hold at. It's nice it works. And the levels are quite particular. And again, I'm still aiming for my second equilibrium at 310-ish there. So I'll put take profit around 308, 309 there. I'll be right back. We have guests, so I have to pop in and say hello. See how we have a body above that level right now? Body closes above here. I want to see that provide support now.
How's that mean? Colors.
I know. Didn't know.
I think they're getting ready. Maybe a few minutes. People see
Okay, where are we at? So we've come back down and tapped that box one more time. See that? All the way through into this candle. Wow. See, I'd have like one tick below that low. We're still there. So now this is going to go just below that equilibrium. I don't even want to see this mean threshold get taken again. That's it for me. We've already attacked this equilibrium more than this mean threshold twice, so I'm losing my love for that. Too consolidated for me. I want something to leave. So that mean threshold's gone. Got a body below it now. And we've come back in and tapped it. Now, are we going to come lower? And we're really between this one and this one inside this small range right now. And we have not traded below this yet. But this is too consolidated for me. If you're doing like, you want to be a micro trader and not catch, you want to catch longer rides than playing a long, higher time frame chart. All these other ones still tell me it wants to go higher. So I just came back, found support here. Get a body above here one more time. Might give that another go. We're just coming up and filling the rest of that 4 hour at 291. That one you pointed out there, Hadi, of the 4 hour, 267. 267 would be right in here. So one more little pop above here, if it rolls over, that will be your 4 hour level you're looking at. And I like the way you're hunting them back there now, Hadi. That's good. You're hunting those specific levels back there. See, this whole rolling over thing, don't like it. The fact that we rolled through that, didn't just tap it and leave, this candle right here, not what I wanted to see, this wick. And the fact that we came into it again, no, I'm out. So you want to see a body get above here again before considering pushing higher. So we'll keep on hitting this level. We haven't broken through it yet, so I guess technically there's your reversal situation at 232. If we get below that, use that as support. Look for mean threshold of this or consequent encroachment of the wick, and then the lows again. So just staying on the horse. The horse is spinning around, jumping and kicking, trying to pop you off right here, here, and here. So you got 1, 2, 3 levels. And you're looking at from a premium discount level, you're probably looking at the bottom one. Yeah, there's discount, there's premium. Yeah, I like to see it just pop up here and then run lower. See, these are all the things you should start to question when that equilibrium, that mean threshold gets taken. You got to question it right here and start saying, that's not acting the way it should. If I want to see that keep going higher, I want to see it tap it and go. It's not acting the way you want. As soon as it's not doing what you want or you don't feel comfortable with it, just get out of your trade and wait. Wait for something cleaner. Demand precision from the markets. There's a tap of that discount box there. So I go here and here. Just tapped it. So now you've come all the way down into this range here, and you've done your 70% optimum trade entry or whatever that is. You're definitely in a discount portion here. So you want to see that run with aggression now straight through all of this, create a fair value gap above you, and keep going higher. Or if this is only 10:30, so we'll see a low created here, run back up higher, and then 11 o'clock run through and take out this before going higher. We may not see a big run all the way back down here at 11. If this catches it early, it's two scenarios I'm thinking about here now. Now see how we've already started to wake in through it? Follow the rules, ES did. Took the high. ES, let me see ES here. You're talking about the 1 minute VD? Oh, yeah. And Q took the high too, did it not? No, it didn't. So we have a little divergence going on there, hey? So SMT, so ES made a higher high here, and NQ is making a lower high. So it's the weaker one of the bunch. ES ran the high and starting to come. Looks like it's making another run on that high. So I'm not crazy about SMT stuff because it changes up on from 1 minute to the next. It can turn on you. There, it just ran into that, just ran that high out again, and these guys aren't. So on this candle, ES has already ran these highs out, and Nasdaq's refusing to take those highs right now, just in this candle alone. So there's an SMT going on right now between ES and NQ. So we're above that level. We're above this mean threshold. Use support. You go all the way down into here. We're above that one now. This level here. Inside this tighter range. Now we're compressing here. This one here, this one here. So ES is coming back now and tapping that old high. That's a nice little run from there. It's an entry higher for it to go higher. Now this is just coming in and tapping that level now. That would be a higher. I'm going to wait for it to get out of this consolidation to confirm first. So right there is an entry long to confirm you've just got a little change of direction here. And if it closes back below here, wait. Now this is the same kind of setup I gave you earlier when we said we didn't get a low taken out and you've got this fair value gap. We can make one more run on this low before going higher. See how that took out this? This has not, oh, I guess it's taken out that one there. Yeah, I guess it could still stay valid. We come back, tapped it perfectly. we going to come back into here? Or is that going to hold? We want to see this high get taken, find some support at it, keep going higher. Now let's see fair value get forming here though. A few tips on SMT. SMT is only valid if it happens at a key time and at a key level. So for example, at the hourly during the macro window. Okay. I haven't studied it enough to be anywhere near efficient with it. Wait for it to get out of here. Just stay on the horse right now is all I'm trying to do. That would seem more logical to me, Ollie, than every candle, because every candle is going to be, wicks are going to be all over the place, right? So there'll be SMTs all over the place if you used every candle as a comparison instead of a specific time, like a macro. Yeah, see how it changed up? Now we're right through this level. Wait. So we're through this one and we're back inside the larger range. So the small little range here, there to there, we're popping through that level and we're back to the deeper one from here to here. We traded through that. Now if you come back into this, watch this little tap right here at 239 to 243. If we close below that, then I'm looking for this candle. If you really want aggression, this candle should hold without even coming back into there. We get a body below here now. You're using this candle's wick and that body right there before you take this one out. Three, two. Yeah, another delay in this. Jeepers, man. This thing's just delaying like crazy. Okay, so we got no body below here yet. It's just literally frozen open on it. So now we're back into this level here. That we have not got a body below there. So look at the precision there. Now I want to see that roll over and come back down. Take out this wick. Otherwise, bear trap. See how we've come down here and we did not get a body below there. Literally closed and opened on it. Ran through this level. We find support at that level. Look for that 248 above you. We're going to get above here and above here. So they're really getting compressed. They're really tight now. Small data points I'm looking for is 248 and 239. Really small now. They're so compressed, you gotta wait for it to break out of here. Bus is coming. Big blue bus, blue or red? Well, if you're using blue candles to go higher and red candles to go lower, I'm stuck. We're at a roundabout right now. Our bus is at a roundabout, changing color on me all the time, Hadi, so I have no idea right now. It might just hang around in here and give us one quick run up into here at 11 o'clock. and give us a reversal into 12 and then continuation. I do like this regular trading hour gap. We traded through it and we're right back into the consequent encroachment of it. We've tapped it and I want to see that go higher. So I'm looking for a big blue bus, Hadi, if you're looking for your big blue. And for me, it's a big gold bus, a big yellow bus. That's what I want to see go higher now. The swing highs and lows during the macro are important. S&T between swing points forming and macro are valid S&T. Again, it should happen at a key daily, etc. Maybe it's your guests who are abusing your internet. Could be. I get a moment of quiet. They're out there taking the dog for a walk. I can tell I'm getting old because noisy yelling and screaming and dogs running everywhere just makes me go, oh, sit still, stop moving, stop having fun. I could feel the old man in me coming through. Stop walking on my couch. Just sit down. Get your dog to sit down. I'm getting old. Yeah, I agree. It's something you got to come up with something that's consistent there, Ollie, for entry points. We're above this level again. We've got a swing, traded above it here. We're back inside it here, run higher. That one's taken. Come back, find support at this. I want to see that go higher now. I tell you, Abs is great. If you ever get a chance to go visit Abs down in Albuquerque, the man's got, you know, you probably look at his backyard, it's covered in rabbit holes because he goes down rabbit holes, man, and he explores. He loves to pick the charts apart. He'll spend months, weeks just digging away at stuff. So he has very interesting insights into what he sees that Michael has mentioned, even if it in a fleeting passing comment that he gives. Abs is like, what did you just say there? And then out comes the shovel and he starts digging and he comes up with some interesting stuff. He digs down. That boy is a previous rabbit that has been hunted in a previous life. He's back digging holes. So far, we're above this level. I like it. I want to see this accelerate here. Otherwise, we're still in this consolidation. You want to see a displacement candle now. And just wait for something. And if it takes off on us, it takes off on us, man. No sweat. There's plenty of opportunities out there. No need to rush in on things. We're just trying to stay on the horse right now and see if we can't see where price changes up on us. And you can see how we're literally, these two are overlapping now. We have Abyssy and Mississippi, they're literally overlapping each other. So, and you're inside a consolidation. Why try to chase this? Why try to put money at risk when you have no true direction of where this wants to go just yet. You can see, yeah, on the higher time frames, if you're in on that on the higher time frame, like at a 5-minute chart, way back in here, and you got in on that, you go, Darren, I really don't care what it's doing right there on a 1-minute chart right now. I don't. My stop loss is sitting down here. Maybe I've got this level here. And I go, as long as the body doesn't break below that level, I'm good with that. If I'm using my CAM model or my take profit model 3 level on a 5-minute chart, I'm not worried about all your little changing in direction crap there. If it breaks right there consistently, a body that pops below that comes back into it, then I'll get out. Or you'll say, yeah, I don't care, man. I'm on an hourly chart. Do you think I care what's going on in there right now? As long as that keeps moving for my objective, I'm happy with that. As long as it stays above that level there, I'm good. I'll allow all that to come back there. I've got a higher objective. I'm cool with that too. So you can see how you can get lost in the minutia in a 1-minute chart. And again, I want to, what's that? Okay. See how we keep popping through? That's why you got to wait for this consolidation. Got to wait for this consolidation to get a displacement somewhere. You've got a body below this candle now. It's open. Sorry, this closed, but we don't have a body below the low yet. So wait for a nice little market structure shift, preferably below this breaker here. Then you know you've got that 11 o'clock or 10:30. That's looking better. Get a nice big displacement here. You can correct and see in action over time. I don't like shorts when those relatively equal swings are left above the anchoring as to what stands for ICT is always a lunch hour, as many things from ICT sometimes work, sometimes not. Body trades below here. We've got a body below here now. It's good. Let's see if we can't get a body below this breaker here. And then on the hourly, what would your objective be on the hourly? Looking at a higher time frame, and I want to see a huge price leg go higher, what would I be looking for on the hourly chart for it to retrace to? Just give that a little pop into here. Institutional order flow. No. Anybody have an answer where you'd be looking for in an hourly chart? Price to return to? No one? There's the pop up into it. 5-minute chart would be 228. Now I want to see it roll over here. Come lower. I can go all the way up to this one right here at 240. If it's aggressive, it'll roll over here and come lower. If not, 240. Retap that. Change in direction inside this range now. There's 239, 240, so that gives us a 5-minute retrace into that high. Now we'll see if it sticks here, rolls over, or if it pops through here. And then you're looking for 245. 245 and 248. So your next macro here. Yeah, we're through that level already. Not touching anything here just yet. $15 does look long. Nothing below that breaker yet. Yeah, if you're looking at it from a macro perspective, then that's definitely an SMT. ES made another high in here, and we failed to make those highs. I don't like the wicks. I'm gonna wait for this structure breakdown here. First, second objectives right here. Like a body through here. I'm just gonna put my stop loss just above that. There we go. I'm gonna put one lot on, so I'll stay above the breaker here. Still want to see a body get through here. So good thing you paid yourself there, Hadi, at that low. That's a partial risk-free. You should be out, yeah. I only got one on, so I'm trying to hope for this breaker to hold. I want to see a body continue to come through here and use that as support. Yeah, I would imagine it would be. Well, at least you paid yourself at the low, though. And that's you nickel and dime it, man, if you have to. Piece by piece. You get fat on nibbling cheese, man. Don't wait for the whole wheel to appear before you start eating. So, good for you. It's profits. Take them when you can. Yeah, it's still waiting for a market structure shift. I look for this one here, but I do like this breaker on a close. Has to close below that. But I do like the fact that we've traded a body below the close of that as well. So I'm going to try and hold this a little longer now. So I'm reaching for an hourly objective here and here now. Now, 11 tends to make a run on the recent play at 10:30. So you got to be careful that doesn't run back through us here and take these equal highs above you. You've got lots of relative equal highs above you. I think if we're going to do a little run back down into here, we're going to leave those for lunch. Now, if we take those out before lunch, I'm trying to think of different scenarios here. I still have this as an upside objective. Still have more upside. I just want to see us retrace back into this breaker right here. There's a little swing right here. That last up close candle, I want to see this retrace back into half this wick and touch that body. We've got another 12 minutes of this macro. So the body literally closes on the bottom of that breaker there. That last piece of wick right there, literally closed on it. So technically we have not got a body below that low yet. We start eating through this. My stop loss is going to go right there. This here, I don't want to see any of that candle. The mean threshold of that candle, ideally, I don't want to see that get taken right there and there. And if we go like this to equilibrium, see we're already through it. I'm out. Come on. Get me out.